The rise in global ocean freight costs adding more pressure to the inflation picture. Our next guest says prices are surging to levels not seen since the pandemic. Joining us exclusively is Flexport CEO Ryan Petersen. Ryan, good to see you. So, Red Sea, bad weather, some other stuff combining with this spike. How long do you think these high costs are going to last?
Hey, it's great to be here. Well, now you're asking me a question nobody could know the answer to.
Well, those are the fun questions, but you've got more insight than most, so maybe you've got some idea.
Yeah, well, you know what? We can say that there's plenty of new ships being built that are currently under construction or getting deployed over the next 12 to 24 months. You're going to see a lot more capacity, and ultimately the price of ocean freight is driven by supply and demand. So I think in the medium term, let's call it 12 months from now, we can be pretty sure that the prices will come back down. Short term right now, it's one thing to have a lot of ships, but you also need plenty of containers, chassis. Those are the trailers that hold the containers around. And then these ships and these containers and chassis need to be in the right place at the right time where the cargo needs to move. And we're seeing a lot of cases where there aren't enough containers or the ships are having trouble getting an appointment. And a lot of this is caused by the Red Sea. We had these missile attacks and drone attacks in the Red Sea, and it's caused all the container ships to route around Africa. And that's just created all kinds of congestion and scheduling issues with the ships, and it's made it hard for customers to get cargo where they need it to be.
So I know it sounds early for this, but I got to ask, what's the impact then on the holiday season? Because, it's about 5 or so months away, and it takes a while to get stuff from there to here. Are your customers having to prepare differently even now for Q4?
Yeah, and that's what you see right now. I mean, Flexport's one of the largest shipping companies in the world, helping brands manage. There's a lot of e-commerce brands and a lot of companies that sell consumer goods, and they are starting to pull goods in early, and that's part of what's driving this surge. Is people are worried about the holiday season. They saw what happened during COVID, where they didn't have enough inventory. So anyone who can is trying to get those goods in now, in the event that it's difficult in the peak season, in the holiday season. So we've actually got like an early peak ocean freight season. And one of the concerns that people have is that the ILA, that's the name of the union that represents the dock workers on the East Coast, their contract ends on September 30th this year. And so there's a lot of fear if they can't get a good negotiated settlement and they go on strike or a slowdown, that it'll be very hard to bring goods into an East Coast port right ahead of the Christmas season. So I think people are worried about that and starting to pull goods in early.
Interesting. In light of that, I am curious what you're seeing in terms of the trade dynamics between the U.S. and China, because we know that Mexico has surpassed China as the top trade partner for the U.S. We know supply chains are being rethought and regrouped and rebuilt in other parts of the world, including Mexico. But we also know that you have some of the fastest growing retailers like Shein coming out of China, which The Information wrote an article about regarding Flexport as well. So your comments on that article and your comments on what we're seeing in terms of those trade dynamics.
Well, China is still the manufacturing center for the world. And as many companies are shifting some volumes in certain product categories out of China to lower cost locations, and they've been doing that for a decade. Some of that is driven by tariffs, but a lot of it's just driven by lower labor costs. But for the higher end manufacturing, it's still the best place to produce goods. And it's been very hard for customers for brands, to companies to shift manufacturing for a lot of things like electronics and other products. Even the apparel, fast moving apparel, China's still the leader in that. So, you'll see volumes shift to other countries. You are seeing a lot in Latin America, Southeast Asia, Vietnam's grown volumes like 30 or 40% annually of containerized freight out of Vietnam for the last few years. So pretty incredible growth around the world, but China's still going pretty strong in a lot of categories.